the goal of this course is to help you guys to fully grasp and understand a systematic and comprehensive approach to trading in a profitable way. I want to give you guys a clear-cut, step-by-step system that you can have and take for yourself and tweak and constantly grow on so that you can feel confident when you're looking at the charts, so that you don't feel like you need to ask somebody like me or somebody like CryptoFace or anybody, do you think it's a good time to long? What do you think is going to happen now? What should I do? The goal of this course is to make it so that you know what to do and you're confident in the decisions that you make. Now, when this course is over, I know that you guys will definitely be able to do that as long as you put in the work and study these concepts, watch the videos again if you have to, follow along in these outlines that I'm going to be sending in the Discord. The truth is, guys, learning how to trade is going to be the easy part. Okay, learning how to trade is going to be the easy part. I'm going to give you the information. You're going to be able to understand it. You're going to say, yes, that makes sense. I understand it intellectually. As long as you guys put in the work and study, you are going to learn how to trade. But what separates a winning trader from a losing trader is not knowing how to trade. It's the psychological mindset that will make or break you. You could know everything and still do everything wrong. You could know the right thing to do and still do the wrong thing. And I think that principle applies to areas outside of just trading in general. So let's talk about some things that you need to have in order to be a successful trader. This is just an introduction, guys, but these are very important. The first thing is you must be able and comfortable with taking risks. The truth is, trading is very risky. Trading is extremely risky. These markets are risky. And I'm sure, as many of us know, these markets will humble you, right? If you can't get over the fear of taking a risk, you are never going to be a profitable trader. Because some traders fall into this system of only putting a small amount of money in a trade, or being too scared to take a big position, being too scared to ladder in, being too scared to buy the lows. And even if they make a little tiny bit of money, they're still not going to be able to live off of this. Okay? A good trader needs to be able to adjust to a changing market. A great example, and I'm not saying that I'm a great trader, we're all learning, but right here, we were looking in the Discord, right? We were looking for a green trigger wave on the 4-hour and on the 24-minute. When we got those two things, we realized, okay, this is not playing out the way we want it. We don't like the way things are looking, so we adapted to a changing market. And we said, all right, maybe this is not the best time for us to enter. We'll wait for another opportunity when it comes up, because there will be another opportunity. Good traders are disciplined in their trading style and can view the market objectively with no bias. So, again, my bias is that we are going to test the all-time high and that we are about to enter into a long-term uptrend that will probably take us past 60K. I'm expecting us to go, closer to 70K or even 85K. But when I'm analyzing the charts here, I say to myself, this is not an entry that I am comfortable taking, even though my bias is that I believe Bitcoin is going to go up. I don't really think that this is the best entry for me right now. Okay, I'm approaching this with no emotion. I'm approaching it with no bias, and I'm just looking at what the charts have to say. Another important thing, guys, not getting overexcited about winning or despairing about losing. This is very important, guys. It is so easy when you win a trade to get that dopamine rush and feel like you're on top of the world, like you're the smartest trader in the world, like you're the boss, you're the man, and you almost let your identity get wrapped up in that, right? You win 5 trades in a row, you're like, man, I'm the man. I'm a pro trader, man, I got this down. And then, if you lose a trade and it's a bad loss, the opposite happens. You're depressed, you're embarrassed, you feel like crap, right? These are feelings that we need to get over right off the beginning, because this will ruin our trading. The goal in trading is to do it with as little emotion as possible. Humans are emotional creatures, but we need to get into the mindset of throwing our emotions out and just going based on the technical analysis, the indicators that we have, and understanding that we will have losses, but if we stick to our strategy, we will have wins. Another thing a trader has to have, we have to understand risk management, okay? We need to understand that. We're going to get into that later in the course. This is just the introduction, guys. So, again, learning how to trade is the easy part. What separates a winning trader from a losing trader is the psychological mindset. You need to get into the mindset of a successful trader, which is you are coming at this with no emotion, no bias. You're going to be looking at the charts, and you're going to be executing trades depending on what the charts say. Not depending on how you feel, not depending on the number of gain or loss, but on what the charts say. Now, before you start trading, this is also important, guys. If you are beginning and you're brand new to trading right now, and you are thinking about how am I going to fit this into my lifestyle? Let's say you have a full-time job. Let's say you're unemployed. You need to figure out what type of trader you will need to be, and this will heavily depend on your lifestyle and your life responsibilities, whether you have kids, whether you own a business, etc. Now, this course is going to apply to all different types of traders. But let's quickly just go over the different types of traders. They're scalpers, okay? Scalping, if you're unfamiliar with this term, and I'm sure you've heard it around if you've been in this world for any time, scalping is about making very quick trades. You're trading on a small time frame. The goal is to make constant profits on the lower time frames. If you're trading for 12 hours, you might enter 12 trades in that day. Then there's day trading, which is kind of like the next level up, right? You're making trades over the course of the day. You might enter a trade and be in for an hour, 2 to 5, 6 hours. Then the next level is intraday trading. This is something that I do a lot. It's basically where you're in a trade and you're holding it for multiple days. And then there's swing trading and position trading. Now there's some overlap here, guys, but swing trading is basically where you're entering the low and riding it to the next level. You could be in there for a few days. You could be in there for a few weeks. And position trading is basically like a zoomed out version of swing trading. So position trading in these long swing trades, this is when we are trading on the daily time frame. So let me pull up the daily time frame here and just kind of show you guys what I mean. Let me remove these drawings from the chart. And if we were a swing trader or a position trader, we would pull up our market cipher B and we would enter these lows right here and we would ride it up and sell at the highs. And that's a month-long trade. We're buying a position, we're holding that position for a month, and then we're trading. Again, we would buy these lows right here, and we would ride this up over the course of a month, and that would be a swing trade. If we are scalping, we might be down on like the 3-minute time frame, and we're just riding these little moves. So we might enter right here. We see a nice trigger wave on market cipher B, enter up here, sell out here, right? Again, we might enter right down here and ride this little thing up and sell out when we come down here. And we're just making these constant little, tiny little, moves throughout the day. 1% here, 0.5% there. That's scalping. Now, I know that this is like serious review for some people, but this course is aimed at people who are brand new to trading. So I want to make sure that I cover everything, and there will be questions and answers at the end of this as well. So I want to talk about expectations because this is a big thing, especially for new traders. People do not have realistic expectations about trading. And what I mean by that is there's so much out there about trading. You have people like CryptoFace who can make almost $1 million in one trade. And then you have other people who do this full time. Like this is their main gig is trading. Then you have people who do it on the side. And you have people of all different experience levels. So it's really hard to get a well-rounded expectation of, okay, if I wanted to do this full time, when can I expect that to happen? How much capital do I need? And things like that. So first and foremost, trading is definitely not a get-rich-quick scheme. Okay, guys, if you try to get rich quick trading, you will go broke, okay? Even if you start out winning, you will go broke. I cannot tell you how many times myself and others that I talk to, right? We get into trading in the beginning and we start winning, right? We start trading with leverage and we might win like 5 trades in a row and feel like we're amazing. But because we don't have good risk management, because we don't have a strategy, because we're just randomly throwing money at things and getting lucky in the beginning, okay, that get rich quick mentality is going to lose you everything. And these markets will humble you guys. Okay, these will humble you. It can be very frustrating, extremely frustrating. And so if you're coming at this saying, yeah, I want to get rich quick during the bull run, I'm sorry to say that you probably won't have much success. Instead, guys, what we need to do is we need to study really hard. We need to take our time. We need to work on honing our skills. We need to work on developing a strategy, back testing that strategy, becoming comfortable with trading. We need to look at this as being in it for the long game. We need to look at trading as a skill that we can constantly develop, a skill that we can pass on to future generations to preserve and create wealth within the family. We need to look at this as a means of being self-sufficient, right? Creating a money flow, an income for you to support yourself and your family. Nothing good in life comes quick. And if it does come quick, easy come, easy go, right? The true, meaningful, important, successful things in life come through putting in the time, putting in the hard work, and being dedicated to the process. It's like anything else, any sport you're playing, any instrument, any career path you're choosing. If you want to become a brain surgeon and you don't put in the time and work to become a brain surgeon, you might just kill somebody. Okay? Another thing, guys, if you have a small account, it is going to take you some time before you are able to trade full time. And don't be in this for the sprint if you have only like $1,000 to start with, okay? What you need to focus on if you have a small account in the beginning is 1, honing your skills, 2, gaining experience, and if you have a small account, remember that your main focus should be the preservation of your money, okay? Your focus should not be on gaining money in the beginning if you have a smaller account. Your focus should be on preserving your money because here's the thing, guys. When you're trading, your money in your trading account, your capital, is the only means that you have in order to make money. If you continue to drain your capital, you are draining out your ability to do the very thing that you are setting out to do. You are setting out to be a successful trader. You are setting out to do this and make a change in your life. Maybe get some financial freedom. Maybe be able to support your family in a better way than you have been able to. Right? So if you have focus on the marathon, not the sprint. Hone your skills, preserve that capital, and the gains will come, especially in the crypto markets, guys. Especially in the crypto markets. If you learn good risk management, responsible use of leverage, and you can ride some of these awesome moves up in Bitcoin, you could easily make 400, 500% in one trade. So it will take you some time before you're able to actually do it full time and live off of it alone, but it is possible as long as you put in the work. Something else that's very important, guys, and this is basically the whole thrust of this course, is you must create a strategy. You must create a personal strategy that you know works for you so that you don't have to go to anybody else or anywhere else in order to know if it's a good opportunity to trade. Building confidence, I think, is the most important thing because otherwise you're just going to be flopping and groping, right? Like Crypto Face would say. If you have no guide, if you have nothing to orient you, if you have nothing to look at as a banner showing you which way you should go, if you have no compass and you're in the middle of the ocean, do you think you're going to get to your destination? Absolutely not. Look at your strategy as the compass that is guiding you. And my goal here is to teach you exactly how to do that. I'm going to give you my own strategies that I use, and then you will be able to build upon them. So, what do you need for the course? If you're here and you don't have these things yet, you need to get them. First is TradingView. Okay, this is TradingView. the free TradingView account will work. Okay, you do not need to have a paid TradingView account for this course. However, I recommend that you get TradingView, at least the free version. Second, guys, you need Market Cipher. Okay, you need Market Cipher or some kind of basically the same thing as Market Cipher. There's free versions out there that are not quite as accurate. To be totally honest, you can get by with those, okay? You can get by with those. I don't recommend it because you'll miss some signals or maybe be late to an entry, but you can still get by with them. Another thing you need is a trading account on an exchange. So if you have not signed up for Bybit, if you have not signed up for Binance or KuCoin or Kraken, I don't recommend Kraken. For trading altcoins in the United States, KuCoin will give you the least amount of trouble. Bybit is great for trading those perpetual and inverse perpetual contracts. Even in the US, if you have a VPN, you can make it work. So sign up on an exchange. If you have questions about that, you can ask later. We need to have a desire to learn, and we need to have a desire to work. This information is something that you are going to have to drill into your head, especially if you're new, okay? It's going to take repetition. It's going to take time. You're going to have to spend hours looking at charts, especially in the beginning. You are going to be spending hours going back in time, looking at different things that happened in the past, seeing what had happened and what you would have done if you were in that situation, because knowing the history will help us understand what will happen in the future. And if you put in the work and the time, guys, it will pay off. I know how overwhelming it can be in the beginning. I know how overwhelming it can be, but it will pay off. So after every course, after every session, take the time, go back and study, okay? So let's talk about how to use and customize TradingView. So this is TradingView right here, and actually, let me just do something in here. I'm pretty sure there is a way for me to, perhaps not, to make it, here we go. I'm going to make TradingView the way it will look when you first enter TradingView, okay? When you first get TradingView and you sign up with an account, you are going to have a white TradingView with green and red candlesticks like this, okay? Now I'm going to get more into what candlesticks are in a second, but this is TradingView. When you first open it up, there are a lot of options. So basically, in order to look at a certain chart, you're going to come up here on the upper left, click right here, and you're going to type in the coin pair you want. So if you want Litecoin against the US dollar, you're going to type in LTC USD, and that will bring up the options for the different coin pairs. So depending on what exchange you're using, if you're using Coinbase, you will want to click LTC USD that says Coinbase. If you're using Binance, you will want to click LTC USD on Binance. If you're using Gemini, BitMEX, Bitstamp, Bitfinex, Kraken, you will want to click that ticker. Now, if anybody doesn't know, the way these tickers work is the second currency is the currency that you are actually going to be earning in the trading pair. So if I'm trading LTC USD, I'm going to be earning my profit in USD. If I'm trading BTC USD, I'm going to be earning my profit in USD. Now, if this applies unless you're trading on Bybit, where you can actually trade the BTC USD pair and earn Bitcoin, and we'll get into why that is later. But just right now in the beginning, know that the base currency, the one that you will be getting paid in a coin pair, is always the second one. So if we're trading a pair like this right here, ADA against Cardano against Bitcoin, we are trading Cardano and Bitcoin, but we are getting paid in Bitcoin. Our profit is going to be in Bitcoin, okay? Now, there are some things that we need to mention. The first one is creating a watch list. Now, if you have certain crypto coins that you are watching, that you want to be able to check easily every day, right here in TradingView, you can click this first icon. It looks like a little list. You're going to click that list, and this will allow you to add tickers into a list so you can easily switch between Bitcoin like this and Ethereum like this and VIDT just by clicking on them. And you can give them different color codes. You can give them little notes and stuff like this. You can add a new watch list. You can add something to your watch list by clicking the plus button right here and then putting in, let's say you want to do like this is a forex pair, but the Australian dollar against the US dollar, and you just put that right in here. It'll go to your watch list for easy access later, because if you're taking a look at multiple different coins, you're going to want to switch back and forth easily between your charts, okay? Another thing you can do, guys, is you can set up a certain chart layout where you can have, let's say on my left side I have black trading view, Bitcoin on the 4 hour. On the right side, I have VIDT data link Bitcoin on the 1 day. You can come up here and you can actually save this layout with all your trend marks, all your lines, all your drawings, all your indicators, and you can come back to it later. Okay, this is important. You'll be able to save your layouts, and you can click autosave so that things will autosave for you. And you don't have to constantly do it. That's great in case your computer freezes or in case you close the browser by accident and come back in. You can have multiple watch lists, guys. Right here, this will be your watch list where you can create a new watch list. Give it a name. What name should I give it? FOMO watch list. These are the coins that I'd like to FOMO into. And then to add a ticker here, I will just click the plus sign. And what's my favorite FOMO coin? Of course, Bitcoin. Bitcoin USD on Bybit. My favorite time to FOMO. Go all in, 100x, no stop loss. Putting it on my watch list, all right? Let's talk about indicators. Indicators are going to be up here in TradingView, this FX logo. In order to add an indicator, you're going to click the FX logo, and you are going to be able to search for an indicator. So let's say you want to search for Market Cipher B. You're going to start typing in Market Cipher B. Okay, it will come up if you're in the invite-only script. And when you have an indicator that you want to use often, guys, make sure to click the star next to it, because this will put it in your favorites section, and then you won't have to search for it every time you want to use that indicator. And I'm going to be talking about starring things a lot in this session, because when it comes to even things like time frames, when it comes to things like trend lines, we're going to want to star these tools so that we have easy access to them. That's indicators. Let's talk about time frames. Now, we're going to do a whole section on time frames, but time frames are important. When you first open up your TradingView, you will have a drop down. This drop down will show you some standard time frames. You have the ability to add a custom time frame. If you scroll all the way to the bottom of the drop down, let's say I want to add a 32 hour time frame. Just put in 32 hours, click add, and it will give you the 32 hour time frame. Well, maybe that's too many hours. Let's do the 6 hour time frame. Oh, okay, I already had the 6 hour in there. You guys get the idea. You can add a custom time frame, and if you star one of these time frames, right? Like if you star the 17-minute time frame, it will add the 17-minute time frame up here to a quick list of buttons that you can easily maneuver in and out of. Okay, so that way I don't have to pull down the drop down every time I want to change time frame. I just do the 3-minute. Okay, that's looking nice. Let me see about the 7-minute. Looking pretty sweet. Okay, great, looking great. Okay, these are our tools right down here. We are going to be going through these a lot more in the future, but again, star the ones that you like to use, because if you star them, like the horizontal line, it will put this little box of quick tools on your TradingView where I can easily, if I want to do a fib retracement, I don't have to come into the pitchfork section, come down and click fib retracement. No, I just click it right here. Then I can just do my fib pull real quick up here. And I can say, okay, look at that awesome move. Look, we came down and bounced off the 618 perfectly. So we'll get more into that later, guys. I want to talk about customizing the look of TradingView, because I know a lot of people hate my blue and purple candles. Everything in TradingView is customizable. Every indicator, every chart. If you want to customize the look of your TradingView chart, you're just going to right-click on it, and you're going to go to Settings. And here you'll be able to customize your candles. You'll be able to give them whatever color you want. Let's give them orange for the up, and let's do black for the down. Orange and black. You can give the borders that you want here. You can give the wicks a certain color. So if you only want the wicks to be purple or hot pink, you can do that, okay? And you can change the background by clicking on appearance. And this is the background. You can give yourself a nice gradient. You could make it green and red like this. Doesn't that look nice? Grid lines, you can either keep those on or take those off. And there's a lot of different settings in here, and honestly, it's pretty intuitive. It's pretty intuitive, but this is how you would customize your trading view. Man, that is beautiful, isn't it? Isn't that beautiful? If you're using an indicator like Market Cipher B, okay, and you want to customize Market Cipher B, a lot of people talk about my, oh man, is that beautiful or what? A lot of people talk about my Market Cipher B. How do I get it to look this way? What are my settings? Guys, whenever you're using any kind of indicator, there will be, if we put it on, let me get to the 4-hour chart here. Let's do a Market Cipher A. If you're doing Market Cipher A, there will be a gear icon right next to every indicator. If you click this gear and you go on Style, you will be able to change the colors of things, okay? This is Market Cipher A. I'm currently, let me put on ribbon 5. You can change the color of ribbon 5. Let's say we want it to be blue for the downtrend, and we want it to be, you know, let's say yellow for the uptrend. And let's say I want it to be, instead of a line, I want Market Cipher A, the EMA ribbon, to be crosses. And let's say that I want them to be really thick and big like this. I can change different settings in here, okay? Now, I know I've just created the most beautiful looking trading view ever, so I actually have this patented. So if you try and copy this, I will come after you with a copyright strike and sue you in court, okay? So don't copy this, but I'm just showing you what I can do. Now, I know, I'm an artist. I understand that. Same goes for Market Cipher B, right down here. Let's see Market Cipher B. We should be able to have a gear somewhere when we highlight Market Cipher B, where we can change the color of the VWAP, we can change the color of the waves crossing, we can change everything, okay? We can change everything. So, oops, I just accidentally made Market Cipher the way it's supposed to be. Now, this is absolutely disgusting. So let me close out of here. Let me come into a new panel here, and I'm going to remove the drawings. I'm going to remove the indicators, and we are going to get into some basic TA, okay? We're going to talk about how to read charts. When you pull up a chart, okay, first of all, if you just have the regular chart on, you're going to be seeing things called Japanese candlesticks, okay? These are Japanese candlesticks. When I'm trading, a blue candlestick means that the price has gone up during that period of time. The purple candlestick means the price has gone down during that period of time. And each candlestick will represent one unit of time that is equal to whatever time frame you are viewing in TradingView. So if I'm on the 10-minute time frame, each candlestick represents 10 minutes of price movement. If I'm on the 6-hour time frame, each candlestick represents 6 hours of price movement. And the movement of price, up and down, the volatility of price, is known as price action. The movement of price is called price action. Okay, and the way we can keep track of price action is using Japanese candlesticks. Now, let me quickly explain what a Japanese candlestick is. There are different parts of these candlesticks, and they all tell us something about the way price is moving. If we have a blue, or here, let me, for the sake of this tutorial, let me make these red and green, because that's what most people are trading with. If you have a green candlestick, okay, the bottom of the body of the candle, okay, which is right here, the bottom of the body, this is the opening price. So if we put our cursor over here, we can look to the side and see that the price of Bitcoin when this candle opened was $48,116.00. The top of the body of the green candle is the closing price. The closing price was $48,783. So we can see from the opening of this candle to the closing of this candle This is the low, this is the opening price, and this up here is the closing price. Now the wick is telling us the all-time high and the all-time low during that candle. So during this candle, we had come all the way up to this level right here, and then we came all the way back down here before we closed. And during this candle, because of this wick, we also wicked down to here and came back up. So we need to understand that this candle had a lot of volatility in these 4 hours. I'm sorry, this is a 6-hour candle. In this 6-hour candle, some interesting stuff happening with Bitcoin, guys, man. Some interesting stuff going on right now. But I'm teaching this course, so I'll get to that later. The opening price, the closing price, the all-time high of the candle, the all-time low of the candle. If you have a red candle, it's just the opposite. The top of the body is the opening price, the bottom of the body is the closing price, and then the wicks give us the high and the low of that candle. Now, these are called Japanese candlesticks, and I have attached in the Discord a file that is called the Candlestick Cheat Sheet, and I actually have it right here as well. This is something that I want you guys to start to study and to start to familiarize yourselves with. We have different types of patterns that happen with these candles, okay? And these patterns will actually give us hints as to what the price is going to do. We have different types of candles, and you might hear these terms being thrown out a lot. For example, a doji. A doji, it's right here, is a candle that has a very small body and very long wicks, and it symbolizes to us a period of indecision, or sometimes it can symbolize a trend reversal. Okay, a lot of times, if we find ourselves in a downtrend, right, and we print a doji, that might signify the end of a downtrend. Now, there are a lot of variations on the doji. Okay, we have a hammer, an inverted hammer, a dragonfly doji, and a bullish spinning top. These are bullish candlestick patterns. If we are in a downward trend, and you see one of these candles here, this signifies we could potentially be heading into an uptrend. Why? Because the price opened up right here on this tiny little body. The sellers tried to push the price down, but the buyers pushed the price back up, and we ended with a candle with a tiny body and a long wick. Now, another way to look at these candles and to think about them, guys, is they're basically telling us what's happening as far as the buyers and the sellers go and the psychology of the market. If we see something like this, we know that there's a battle going on between the buyers and the sellers. We know that the sellers are trying to push the market down, but the sellers have lost control of the market and the buyers have gained control of the market, and they're pushing price back up. This is a very bullish candle. On the contrary, if we see the exact opposite, where we're in an uptrend and the buyers tried to push the price up and it only got this long wick and then came back down and formed a small body like this, this is a very bearish symbol. And I want you guys to memorize these patterns here because they are important for recognizing trend reversals and bullish and bearish patterns. Okay, there's a lot of patterns here. You know, the two candle patterns where we have a bullish kicker, where we have a downward candle, like a long red candle followed by a long white candle. That's a bullish sign. A bullish engulfing candle. This is an important terminology to know. An engulfing candle is when you have one candle and then you have one candle that's a red candle, and then the next candle is a green candle that completely engulfs that first candle. You see how the low of the green candle is lower than the low of the red candle, and the high of the green candle is higher than the high of the red candle. This is an engulfing pattern, and it signifies, if it's a green bullish engulfing candle, signifies a bullish trend. If it's a red bearish engulfing candle like we have over here, that signifies a very bearish indication. Okay? And there's a lot of different patterns here. This is a nice little cheat sheet for you. It tells you, it outlines the candles for you so that you don't have to memorize it. You can kind of look here, and eventually you'll familiarize yourself with these, with shooting stars. Like this is a bearish thing, a gravestone doji, very bearish. Hammers and inverted hammers, very bullish. Hanging man, if you ever see an uptrend and then you see a candle with a body on the top with a long wick on the bottom, that's a bullish symbol. Familiarize yourselves with these guys because these will help you do your TA. Okay, so let's talk about Heikin candles. Heikin candles are very popular these days, especially with the whole market cipher thing going on. Okay, now a Heikin candle basically just means average, okay? In Japanese, Heikin means average bar. Now, I admit to you, I do not know Japanese at all, but these are useful for making candlestick charts more readable and trends easier to analyze. Let me show y'all what I'm talking about. Man, I wonder what's happening with Bitcoin right now. Probably some good things. Probably some good things. So, if we were to switch this chart from regular Japanese candles to Heikin candles, the first thing you'll notice is that it's very, very easy to spot a trend because the candles tend to stay green and stay red without a lot of changing. If we go to regular candles, you'll see that, you know, we have green and red all mixed in together. Like right here, we have a downtrend, but we have some green 4-hour candles in here, right, during a downtrend. If we switch to Heikin we don't have that. We pretty much have all red candles during the downtrends like this. We have all green candles during the uptrends. And this is very useful for helping people identify a trend, especially if you're newer to trading, because if you're newer to trading and you're in an uptrend and you see a red candle, you might get freaked out and exit that trade prematurely. But if we have Heikin it will stay green as long as the momentum is in our favor. Another good thing about Heikin is they kind of give us indications when the trend is going to end or reverse, and the way that happens is with dojis, and it's more easily seen on lower time frames. But if you guys take a look at the 24-minute chart here for Bitcoin, you can see that when we're coming to the top of this upward movement, this upward price action, we actually get some dojis, and this signifies, okay, we're probably coming to the top of the trend, and it might be time to enter a little short position. And then again, we get some dojis here, and this might be a good time to exit a trade. And Heikin it's really a matter of preference, guys. It's really a matter of preference. Personally, I prefer regular candlesticks, but I do switch back and forth. Market Cipher B will print different signals depending on whether you're using Heikin or regular candles. And I think it's a matter of personal preference, but this is what Heikin is. And I know a lot of people like to use Heikin candles, okay? One thing to keep in mind with Heikin guys, is they can be deceptive. What I mean by that is, especially on the lower time frames, where sometimes it looks so clear. It looks so clear. We had an uptrend, and then it looks like we had a little downtrend here. It looks like we could have made, you know, some profit on the way up, you know, 1.3%, and it looks like we could have made some profit on the way down, 0.6%. But if we switch to regular candles, okay, we can see that really that uptrend was not as clear as it looked, and that downtrend was definitely not as clear as it looked. And if we had entered here in a short, you know, we would have just traded sideways. It would either been like we probably would have lost due to the fees, right? So be careful with Heikin because they can make it look more profitable than it is. One more thing I want to point out, if you guys are totally new to TradingView, if you want to know how I measure moves, you're just going to click this little ruler right here, and you're going to just click and drag from the bottom to the top of a move. It will give you the percentage that you would have made. All right, I want to talk about identifying trends, okay, because this is very important. There's 3 types of price action that you are going to encounter during your trading experience. 3 types of trends, 3 types of price action. We are going to have downtrends. Downtrends is where the price action is consistently moving downward. It's easy to spot a downtrend because you can take a trend line, like right here, and just draw a line, and price action is moving with this trend line. Then we have uptrends. Uptrends are the exact opposite, where you have price action moving upward, like this, and we can clearly see that we're in an uptrend. Now, the third type of price action is called consolidation. Now, consolidation is something like this, where we are trading within a range. We're not in a clearly defined up or downtrend until we break out, like we're doing right here, and then Bitcoin goes to a new all-time high, right? So this is an area of consolidation. It's very important that we are able to identify these three types of price action, because if we are unable to identify them, we will definitely get sliced up. It's always best in a downtrend to prioritize or focus on shorting, meaning selling, right? You would want to, if you know you're in a downtrend, you know you have a higher chance of making profit if you're going to short the market, which we'll get into more later, where you're selling in order to make a profit and buy back at a cheaper price. If you're in an uptrend, you're going to want to focus on longing, where you are buying and selling it at a higher price to make a profit, okay? If we are in a sideways market, like we are right now, well, before this little breakout thing happened, and this is on a low time frame, by the way, you want to be very careful in these areas. And you might want to focus on making small moves if you can identify a range, and trading the lows and selling the tops, and buying the low and selling the high, buying the low and selling the high. Now, this might seem very elementary, and you guys might be thinking, why are you even talking about this? The reason I'm talking about this is because this is probably the most important thing, because the old cliche in trading is the trend is your friend until the end, meaning if you are in an uptrend, you want to trade with that uptrend. That uptrend is your friend. That uptrend is going to help you long and get profit. If you're in a downtrend, you want to short. That downtrend is most likely going to continue, and you are going to be able to make profit shorting. The trend is your friend until the end, because it's only a trend until the trend reverses, okay? And identifying trends, identifying areas of potential reversal are very important. Now, consolidation usually tends to be an area of reversal. If you see price trading in a range, you can kind of safely say, we're not in an uptrend, we're not in a downtrend. I am waiting for a trend to form so that I can go long or go short, and in the meantime, maybe I will trade in this range. Now, it's very important when we're looking at uptrends and downtrends that we understand time frames. Now, this is kind of a preview for the next session, which we will have tomorrow at 2, where we're going to go into trends and time frames and how to identify the trend on multiple time frames. But when we're looking at charts, we need to understand that when we're looking at different time frames, we're looking at the same exact thing in different resolutions. So right now I'm looking at Bitcoin on the weekly chart, which means every single candlestick is one whole week of price action, okay? One whole week of price action. Now, 2 weeks ago, we had this huge red candle, right? Price went from almost 60K all the way down to 43K. Now, if we're looking at the weekly chart, nobody would say we're in a downtrend, because price is clearly going up. I can draw this trend line, and price is clearly moving upward. Nobody would say that we're in a downtrend. Everybody would say that we're in an uptrend. And even if I go to the daily chart, again, we're zooming in now. Now each candlestick, there's 7 times more candles than there were. Each candlestick is 1 day worth of price action. Again, nobody would say that we are in a downtrend. People would say we're in an uptrend. If we go to the 1 hour chart, guys, and we go back in time to the period where we were up at that 60K level. Let's see where that was. Where was that? No. Here we go. Yeah. We were up at this 60K level, and we kind of like zoom in a little bit. For that period of time right here, we were in a downward trend. So our goal is, we're going to be analyzing multiple time frames, and we are going to be looking at trends and counter trends within those time frames in order to help us time our trades. Now, a trend is this. This red line down here is the trend, an upward trend. A counter trend is when price temporarily moves against the main trend. So I'm going to make the counter trend yellow and the main trend red. Okay? This is important because this will allow us to enter shorts in an uptrend. If we can identify the main trend on a higher time frame, and then we can identify counter trends on lower time frames, we won't get confused. If you just pull up the 5-minute chart only and don't look at the higher time frames, it can be very, very difficult to know if we're in an uptrend or a downtrend. You know, like for example, if you're only looking at the 5-minute chart, you have no way to know if this is a counter trend or the actual trend. You have no way to know. And if we come back to, you know, this area right here, and you just pull up the 5-minute chart, and this is all you see. This is all you see is this price action here. You might get confused and think that we're in a downtrend, and you might want to enter a short. But if we zoom back out to the daily, you can see that we were not in a downtrend at all. In fact, we're in this massive uptrend. We're in this massive uptrend. So that is pretty much everything for session 1. I am going to, and for those who have been trading for a while, I know this is the most elementary stuff, but put your head around, put yourself in the shoes of somebody who's never traded before, and I want to provide a comprehensive outline for everybody who is totally new, who doesn't know what a candlestick is. So I'm going to come into the Discord, and let's see if there's any questions in here, and I will answer them one by one. So, okay, does anybody have any questions? And if not, that's totally fine. We can end the course. Raw bit, color coding is not available in free TradingView. I'm sorry, I didn't know that. I did not know that. So if you have the free TradingView, you cannot color code. However, you can still do the basic functionality, and that's really all you need. PK Ngaru, why are some of my candles green on the outside and red on the inside and vice versa? PK, you have an indicator on. It's something similar probably to the Wolfpack indicator, where it's basically giving you a hybrid of Heiken Ashi and regular candles. Yes, Clint is right. Looks like you have an indicator on. Maybe turn that indicator off. So if I go back to my TradingView here and I put on like Wolfpack ID, you can see that it will change the colors of my candles. Actually, it won't because I have it set not to. But if I click bar color, you'll see that it actually changes. Some of my purple candles are green, and some of my green candles are purple. So if you have that on, you can go to Wolfpack ID, you can click the gear, and you can click bar color on and off, whatever you prefer. Okay? See if we have any other questions in here. Yeah, guys, this is the basics. You know, this is geared to somebody who doesn't know anything about trading. We will definitely get more in depth as time goes on. And in the meantime, guys, if you're not familiar with these patterns, study these. Study these, print them out. You could even make flashcards if you want to. Study them, become familiar with them. Do we need API keys in Bybit? Purple Walrus wants to know. In Bybit, Purple Walrus, we cannot link it to TradingView. So this is important, guys. But basically, the excuse me, guys. We're going to have to make our trades in Bybit separate from TradingView. So we're going to be looking at TradingView to do our charting, and then we're going to go over to Bybit in order to place buy and sell orders. Okay, you can't link Bybit to TradingView with API, and honestly, it doesn't really matter because. Give me 1 second, guys. I got to get a drink here. It doesn't really matter if we're putting orders in TradingView or not, because if you have Bybit on your cell phone, you can just be looking at the chart on TradingView, put in an order on your phone, and then edit it on your computer later if you want to. So that's really not a problem. Let's see. Is there a downloadable for that chart? Yes. Water Skier 20. If you go into the Discord, okay, and if you come to course materials down here, and you click course materials, you will get the outline and you will get the picture right here. And these are both downloadable, okay? Let's see here. Raw bit. Yeah, right. I need to do that. I don't want to pull up my trades right now because I am live streaming. I am Stanway. You said we need to have Market Cipher. but what other indicators do you personally use or recommend that we use? Okay, guys, personally, I use Market Cipher B. I use basic EMAs, okay, exponential moving averages. I use the Wolfpack ID, okay. I use CryptoVac A, CryptoVac average true range often. This is a paid indicator. It is not necessary for this course. If you have the money, go for it. It's a great indicator. But it's not necessary for this course. They will give you a 7-day free trial if you go to the Super Kitty Discord and tell them that Jayson Casper sent you. Something else I use is the Agora Algo. I use this to supplement my technical analysis. The Agora Algo will give you bullish and bearish signals. It will draw support and resistance lines for you. Again, these are not necessary, but they do help. And the goal of this course is not to tell you guys to buy a whole bunch of indicators. It is to teach you how to do your own TA. And these indicators are great supplementary tools, but they are not necessary. Okay? It's important. Okay, let's see here. What happens when I change the leverage while being in a position? More leverage when it goes in my direction, vice versa. So, why, Trob? If you're changing the leverage in your position, this is kind of off topic for this course, for this session, but basically, if you make your leverage higher, that means you now have more liquid assets to enter into more trades. So if you entered 100% of your account into a trade on 1x leverage and you shift your leverage to 2x, you now have more money to put into a trade. Okay? The liquidation price will become higher if you make your leverage higher. So if you move from 1x to 5x, your liquidation price will be 5 times higher than it was, give or take. Duarte, any idea why only one of the levels is duplicating on the second chart and not the other 4 lines? Yes, it's because those are 2 different charts and you need to plot lines on them individually. So here's what I like to do. If you want to have 2 charts pulled up here. Whoa, sorry guys. Sorry. Man, I can't wait to dig into these charts after this course is over. But if you have 2 charts pulled up, right? One on the 4-hour, one on the 24-minute. What you are going to do, if you can see, when I'm moving my cursor over here on the left, over on the right, it's actually following along exactly where I am. So even though they're 2 different time frames, I would have to then come over here, come over to this chart here, and basically line my cursor up like, hang on, I have to zoom out. You would line your cursor up like, I hope you can see what I'm doing. So as I'm moving my cursor up and down on the right, it's also moving up and down on the left, and I can tell when I'm in the exact same spot, and that's where I would Control H and put a horizontal line there, and then I would come down here, and I would Control H and put a horizontal line down here. And guys, just so you know, we are going to get into, drawing horizontal lines, drawing trend lines, and stuff like that later. But if you're unaware, a good shortcut for drawing a horizontal support line is just Control H. Let's see if there's any more questions in here. I hope that makes sense. If not, please, Duarte, let me know. Yes, the Market Cipher ebook, you can read a lot about that where it describes each signal. I will be also going into that into the course. MigZ wants to know what are perpetual contracts and inverse perpetual contracts. We will be getting into that later, but the basic of it is an inverse perpetual contract means you can trade the BTC USD pair and get paid in BTC. It's inverse because usually if you're trading the BTC USD pair, you're getting paid, your profit will be in US dollars. It's inverse because you're actually getting paid in BTC. And regular old perpetual contracts mean you're getting paid in the base currency, which would be USD. And the reason they're called perpetual contracts is because on Bybit, we're actually trading always on margin. We're never actually spot trading on Bybit. We're always just putting our assets up as collateral and borrowing from the exchange. Even if it's functioning as spot trading and the risk is the same as spot trading, we're still technically trading with margin on Bybit. It's just like trading Forex. That's how on Forex you are able to trade the euro and the Canadian dollar, even if you only have US dollars, because you're putting your asset, your US dollar, up as collateral. The exchange is giving you euros to borrow, and you're trading the euro and the Japanese yen, even though you don't have either of those two assets. That's basically what Bybit is doing. We'll get into more of that later. Purple Walrus wants to know, where is the Market Cipher ebook located? If we go to the Market Cipher website, guys, marketciphertrading.com, and we go to tutorials, okay, you should be able to find in here those ebooks. I'm pretty sure they're somewhere on the website. Yep. Nope. Yep, here we go. Here we go. You can go on the website, click here, and it will give you the official Market Cipher 101. It'll tell you what everything is. Yeah, it's a good idea to get familiar with those things. Let's see. Ed Dantes. Is it standard best practice to use different colors to represent trend, support, resistance lines for different time frames? Also, is there a standard color for each time frame that most traders use, or is it just preference? Ed, it is just preference, and yes, it is good to use different colors for different time frames, and we're going to be getting into this in detail later. But like I do often say, if we are looking at a chart on the daily time frame and we draw a daily level of support, and let's say we draw it right here, this support is going to be much, much, much more significant than a support that we drew on the 5-minute time frame. And the reason for that is because the more price action that happens along any given line, the more that line is significant, because when price sticks, the longer price sticks around the place, the more likely it is to come back to that place, right? This was a very key support for us back in the middle of February, and we came exactly back down to this support. I mean, exactly back down to the exact dollar. Look at this wick down, and we wicked down to this support exactly. You're not going to see these significant price moves and price action on the 5-minute time frame. You're just not going to see that. So I would, as far as the order of colors or the specific colors, that's just a matter of preference. Everybody has their own way of doing it. You need to come up with a system that works for you. You know, for me, I like to make the color line up with what the time frame is. So if it's the daily time frame, I like to use dandelion yellow. Just kidding. But if it's the weekly time frame, I like to use can't think of a color that starts with W. Yeah, come up with your own system. All right, let's see. Yes, TK42 Dan, multiple charts in one tab may not be available on the free version. You're right. That's important to note. You might not be able to have multiple charts on the free version. You might only be able to have one, and that's okay, because you can have as many windows as you want. So if you're doing the 424 strategy, you just open up 2 windows and go back and forth. And if you really want to get high tech up in here, you know, you just line them up like this, side by side. Super high tech, super high tech. People are always amazed at my tech skills, and I amaze myself. Yeah, really looking forward to understand where to draw the various lines and trends. Yes, we are going to get into that. If we come to the course here, course outline, we will be getting into that. You know, within the next 2 sessions. So this week, tomorrow, and Thursday, we are going to learn all about drawing trends, drawing support and resistance, doing top-down analysis, coming up with key levels. This is going to be the foundation for our TA. If you guys just get this down, you will be ahead of 99% of people who are just coming into this, okay? Because support and resistance, it's the most basic thing, and in my opinion, it's also the most powerful thing because it just works. There are people out there that trade just with support and resistance. They don't use any indicators. They don't use anything. They just use they buy support and sell at resistance, and they win. So, okay, let's see what else we have in here. thoughts on the Bitcoin chart right now. Brutal LA tops. I need to stick on target here, but if you guys want me to look at the Bitcoin chart, I can. Is that okay? Let me see if there's any other questions that are on topic. Will you give us pointers on setting up wallets and tell us about different type of wallets and how to manage them? Yes, I can. In fact, because this is the first class, I can talk about different types of wallets real quick, Migsy. So the 3 types of wallets that exist are exchanges. So that's like Bybit or Coinbase. Okay. Then you have hot wallets, which are software wallets like the Exodus wallet or any other app that you would have on your phone. And then there's cold storage wallets like a Trezor or a Legend. And these are Ledger. They are the cold wallets are meant for hodling your cryptocurrency if you're not going to be trading with it. Okay, that's for long-term storage. So it's the most secure way to keep your coins is in a hard wallet. That hard wallet will keep your private key secure. Nobody will ever be able to hack it. The next most secure wallet is a hot wallet like the Exodus wallet. It technically is more vulnerable to hacking, but it's very unlikely to happen. And it allows you to have quick access to your assets. So it's very easy for you to move assets from an exchange to a hot wallet on your computer or vice versa. It's more of a pain in the butt to do it from your cold wallet. And then an exchange is basically you're putting those assets there because you plan to either trade them or take profits out. As far as setting up the different types and how to manage them, it's really up to you. It's really easy to set up different wallets. You just download the app. The Exodus wallet is a great one for a hot wallet. A Trezor, I'll type it in the chat here. Trezor is the wallet I use, the cold wallet. They come with instructions. And then exchanges are just like Coinbase and Bybit. And, you're just sending assets in there. The thing with an exchange is, remember, you don't actually have control of your assets. The exchange does. If the exchange gets hacked, you can lose all your money. Let's see here. I'm sorry, guys. I got lost in the chat here. Yes, people are talking about how if you sign up for the free version of TradingView, they will give you a discount when it's time to upgrade. Waterskier wants to know, how did I open that side-by-side window? If you have the paid version of TradingView, you just click this button up here, and this will give you the different options that you have in order to see different charts. Okay. Let's see. Yeah, TK42 Dan saved a fair amount of coin by keeping it on the Trezor. Right, guys, that's also a good point that Dan brings up here. If you have a Trezor, right, I always prefer to keep the majority of my crypto portfolio in cold storage because for me, I'm coming at this. I'm a stacker. Okay, I've been into Bitcoin since 2016. I have been accumulating since 2016. Every single month, regardless of the price of Bitcoin, I buy Bitcoin and I put it in my Trezor, totally separate from my trading account. Now, if you're getting into trading for the first time, I highly recommend that you do not put all your crypto assets into a place that's easily accessible, because if you do happen to get tempted to enter a trade with more than you should, it's very easy to make losses. But if you have it in your Trezor, there's no way you can lose it. Okay. Yep, keeping it in cold storage protects you from FOMO. All right, so purple walrus, my favorite color of my favorite animal, wants to do some quick Bitcoin technical analysis. Let's do it, guys. Let us do it. So let's pull up our two favorite charts here, the 4-hour and the 24-minute, and see what we can see. Yeah, I have to be totally honest with you guys again. Like, I mean, obviously, if we had entered long when this green dot confirmed here, or even if we switched to hike into she, the green dot confirmed here, I mean, we would still technically be in drawdown if we had entered on this green dot. And like I said, guys, I just don't like this signal right here. I don't like this signal right here. And the reason why, and I said this before, but if we are printing a green trigger wave up high like this, I want it to be in a situation where the money flow is already thick in the green and we're in so much of an uptrend, the trend being our friend, that we're not even printing anything down here below market cipher B. And if you're new and you don't understand what I'm saying about all this, then just hold tight, because eventually you will, and it'll eventually sink in the more you hear it. But I don't like this signal here because we just crossed over into the blue. I'm feeling like we're probably going to do something like one of these, okay? Like where we have a quick little green wave and then we print another red wave. I really want to see this come down more. Like at least to like right here. And I believe that my sentiment, my feelings of this are based on the data of the chart. And here's why. Look at this. Even when we had this nice green dot on the 24-minute, the second one we printed since this green trigger wave on the 4-hour, this is the second green dot we printed on the 24-minute. We have not seen significant upward price movement. Not enough to make me say we're going to break through this resistance right here. Okay? And now we're coming up to the top where we're looking to print another red one again kind of soon. So really, I would like to see the 4-hour cool off and come down lower. And here's the thing, guys. You guys can trade the way you want. But for me, I like to enter into very low risk trades. I just feel like this is too risky for me. And I know, even if the price goes up, like let's say it ends up that this is an amazing long opportunity and I missed out, right? I missed out on an amazing long, and we come back up and, we come to this next level up here, this next level of resistance, which is right around the $54,000 level, right? If I miss all of that, that's okay with me, because I know eventually market cipher B is going to cool down, and I am going to find an entry that I'm comfortable with, and I will enter it, and it will be a good trade. So I'm not concerned about missing out. Like, even right here, like, we printed a green dot here, and it was a little move. So I'm not concerned about missing out. I'm looking for those big moves. I want that big, juicy, thick trigger wave to happen, right? Like, right up in here in this area, right? Where we see this clear, just boom, right? We see that movement upward. I don't see that yet. Like if this is like our trampoline, we need to fall down and bounce kaboing off that trampoline. That's what I'm waiting for. That is what I'm waiting for. And yeah. I know it's tough to wait it out, and honestly, I was not expecting things to go like this. This is quite interesting. So we will see how the night progresses. I did not sleep well last night because I had an ear open for my alerts. I was hoping maybe we'd come down more and print a nice trigger wave last night. I was waiting all day, hoping it would happen in the morning, but it did not. So let's pull back up the Discord here. Thank you, Tina. I hope people can get stuff out of this. I know that this is so elementary for some of you, but I know for me when I was a beginner, this is what I needed to know. Premier Crypto, what % would you recommend for trading versus entire available crypto funds? Hey man, that's up to you. Like for me, there's a certain amount of Bitcoin that I have to have. Like there's a certain amount of Bitcoins that I need to have at all times. I will never let myself have fewer Bitcoins than that, because that is just, the way I choose to live my life, right? It's up to you. Like, there's a certain amount of Bitcoin that I'm comfortable having long term, and and whatever you're comfortable losing is the percent that you should trade with. In all honesty, whatever you're comfortable losing, knowing that it's potentially I could lose all of this, is what you should be trading with. And anything more than that is probably not a good idea to trade with. Here's a pro tip, y'all. Get ready for a tip. Y'all ready for a tip? I'm going to give you a tip. If you're entering a trade and there's so much money in that trade that you are sweating, you can't stop looking at the computer, every little millimeter that the candlestick moves, you're freaking out, you're trading with too much. You're trading with too much. If you're trading with so much money that you're uncomfortable, you're trading with too much. It needs to be a decent risk where if you lose it, you're like, oh, that sucks. But it should not be so much where you're devastated financially if you lose it or your whole savings is wiped out. So that's just the tip, y'all. So Premier Crypto, sorry that wasn't so clear, but take with it what you will. Thought Bitcoin was going to 40 grand before blasting up, says Purple Walrus. I thought that too, Purple Walrus. I really, really did. I was expecting us to get that nice 30% correction that we see so often during these uptrends, right? But we didn't get that, and it looks like momentum is starting to curve up. But who knows, guys? Who knows? We cannot tell the future. That's why we have our confirmations. That's why we have our indicators. Because they will help us know whether or not we should enter a trade. And I am in a position right now. I don't know if I'm in profit or loss, but it's totally insignificant. And if we come back down here and we cross back into the red, then the next time we cross into the blue, it's going to be awesome. But Market Cypher is great because it's telling us what we can expect to happen, and then we plan for those scenarios. Marinello, thank you for being here. Thank you, guys, for being here. Migsy, how does Coinbase Pro compare to Bybit? Okay, Migsy, on Coinbase Pro, you cannot use leverage. You cannot use margin. You can only spot trade. You cannot short Bitcoin unless you have Bitcoin to sell already, and then you're selling your Bitcoin and then buying more Bitcoin at a lower price. Okay. On Bybit, you can short Bitcoin to earn US dollars. You can short Bitcoin to use Bitcoin. When it comes to selecting an exchange, Migsy, I like to use exchanges that allow you to trade on margin with leverage. I like to use exchanges that have a wide variety of coin selections. So if I'm trading altcoins, which we will get into later in the course, I'll share with you guys my altcoin strategy. If you're trading a lot of altcoins, you want to use an exchange like Binance, if possible. I know you need a VPN in the US. If you can't do that, KuCoin. KuCoin is great if you don't want to use a VPN to trade altcoins, and they do allow you to use leverage. I don't recommend Kraken, guys. Kraken sucks. Setting up a VPN on your phone or your computer. For your computer, guys, I just use this VPN. I have a Mac, and it's in the App Store. It's just in the Mac App Store through iTunes. And I tell, so Bybit thinks I'm from the UK. And like I've said in the past, that means whenever I'm using Bybit, I always just use a British accent whenever I'm using Bybit. Because I know that the government's going to spy on me through the computer. And so I want them to hear my voice and know, all right, this guy is actually from the UK. He's not from America. All right, so it's very cheap. What is this called here? This virtual private network is extremely cheap. You can get one for your iPhone as well. Now I'm getting a little bit Australian on you, right, mate? All right, so it's crikey. You can get one on your iPhone too. All right, and I think for me it's like $7 a week. Okay, just search it in the App Store. If you have a Droid, go to the Google Store and search it. Okay. Migsy, for trading, the way we're doing it in this course, I recommend you primarily use Bybit for most of your trades. If you're trading the big cap coins like Ethereum, and I recommend you use KuCoin for trading the altcoins. the VPN is great. Bybit is super lax with their, like, sometimes I don't even need a VPN to log into Bybit. I don't get it. Okay. If you're uncomfortable using Bybit, you're not going to be able to make as much money because you won't be able to as easily long and short without having the assets already. Coinbase Pro is good for trading for sure. But again, you can only spot trade. So you have a lot more options. You have a lot more potential to make money if you're able to trade on margin in Bybit or Binance or KuCoin. I personally, MigZ, would get a Bybit account just to understand how it works, so you can kind of get the feel of trading, even if you're just using a small amount of money, because I do believe it's the most versatile and easy to use exchange. Okay, I hope that helps. Premier Crypto wants to know, for altcoins, it's better than to just hodl. Oh, you guys are having a conversation here. Okay. Do I ever do long-term trades on leverage like 6 months, says BTC Trader 21. I have never done a 6-month trade on leverage. The longest trade I've ever been in is about a month, and the highest leverage I've ever used in a long-term trade is 3x. And I did not start with 3x. I started with 1x, and when I saw that the trend was continuing, I slowly increased my leverage, which may or may not have been the most responsible thing to do, but it is what I did. So I hope that answers your question there. If you're in long-term trades with low leverage, the fees will not kill you. I am Stan Way wants to know, what is my typical amount of leverage I use on Bybit? Guys, really, I don't go much higher than 5x. I really don't. And I'm not a scalper, so if I'm doing a trade and I'm in for a few hours and I'm on 5x, that is plenty of leverage. Plenty of leverage. If I'm looking to enter a swing long, I will always start with 1x. And once I'm like in some profit, I might switch to 2x and add more to my position when we hit those lows. And we'll get into more of that later. Let's see here. Brutal LA Tops uses private internet access. That's good to know, bro. Private internet access. Oh, Bybit is kicking off the UK. Oh, you know what? Freck went flyer. I don't know. Maybe I should change it to. I mean, I have lots of options here. I could do Australia. Okay, that's cool. I got my Australian accent down. I could do Canada. Hey, it's about time we get on Bybit, eh? It's a horrible accent. I could do Germany. I cannot even try to do a German accent. Okay, not even going to try it. Yeah, guys, to be totally honest with you, when it comes to these exchanges, I'm just where I am for as long as I can be, and when things change, then you got to change with the times. I'm in here to make money, and you know, if things change, then I'll have to go to a different place. Should we use different email addresses when signing up for different exchanges, or is one okay? It's totally up to you, Old Crown. Springboard wants to know, what if I'm in a trade, say at 10x, can I back it down? Can I back down the leverage once the trade is triggered? You can, but remember this, Springboard. If you are 10x and you click 100% of your account into that trade, you are not going to have enough assets to put up as collateral to lower your leverage. You might get to a point where your leverage is stuck at a certain level because you just don't have enough assets to put up as collateral. So you need to be careful. You need to be really careful not to over leverage. That's how people get liquidated. Frequent flyer. Oh, frequent flyer. Sorry, I said freck. This freckin' Discord name is messing me up, bro. Yes, Springboard, so be careful. You can dial it back down, but you might not have enough assets to do that. So you can always make your leverage higher once it's lower, but you can't always make it lower once it's higher. How do you define scalping as far as time frame goes, says Water Skier 2020. Different people define these things different ways. For me, scalping is like the 5 minute and lower, like the 1 minute. The 1 minute, you're like going up and down this thing like a guitar fretboard on the 1 minute. That's how I would define scalping. Scalping, if you're able to do multiple trades a day. When you have water skier, when you have a leverage trade on Bybit, does the unrealized profit and loss show the profit and loss including the leverage position or excluding the leverage? It will show you the profit and loss including the leverage. So that profit and loss on Bybit is actually how much money worth of whatever asset. Like if you're trading for Bitcoin and you're looking down and it says $300 P&L unrealized, when you close that trade, you're going to get $300 worth of Bitcoin into your wallet. Of course, you're going to have to pay some fees, but it's including the leverage. And the percentage is also including the leverage. Like if you're on 10x and you look down and it says, oh, I made 30%, you actually, the price went up only 3%, but your profit went up 30% because you're trading with 10 times more than what you have. Let me see if there's any other questions I missed here. Okay, you guys are having conversations with yourselves. Migzy is typing, so let's see if we have any other questiones up in here, up in her. Taxes. Okay, so first of all, I recommend that you guys talk to your accountants and know the laws in your country, and see what they say. Personally, for me, I have a business called Jayson Casper LLC, which is taxed as a limited liability corporation, and my income is the money I make on trades. I have set this up with my accountant, and it actually helps me pay less taxes than just regular capital gains taxes, which I think is 40% right now. I think the new administration has just made it go up from like 29% to 39%. So talk to your accountant about it and know the laws as far as, keeping track of your Bitcoin trades and stuff like that. I can't really give any more advice than that, other than talk to your accountant and find somebody who's more knowledgeable in that area. My area is TA and trading and not so much taxes. Rawbit wants to know, do I combine my TA of oscillator support resistance together with drawing channels, triangles, etc.? Can you have too many indicators? Great question, Rawbit. Yes. So the goal of this course is actually to show us how to combine all these things that I'm going to be going through here, all of these things, and knowing exactly when to enter and exit a trade, feeling confident. But there is such a thing as too many indicators. There's such a thing as too many indicators, and let me give you an example. So if I have market cipher B, and let's say I'm marking all these levels, like, just random, I'm marking all these random levels on here, and like some people do this, they just have too many support and resistance levels, they don't know how to do top-down analysis, and then they're like, okay, I need 2 oscillators, and I'm going to put some market cipher A on here, and all these tools in and of themselves are very good, but then once you start like loading up your chart with all these kinds of lines and graphs and stuff, what's going to happen is you're going to have too many things to look at and too many things to think about, and you're going to be paralysis of analysis. Okay, you're going to have paralysis of analysis because you're not going to know which things to look at. You're going to be like, well, indicator A is telling me this, but indicator B is telling me this, and indicator C is telling me this. What you need to do, and we're going to teach you how to do that, is come up with a strategy, and your strategy is going to be based around certain indicators that you always use, and they're going to work together synergistically. Okay, we're almost going to put together an algorithm where you're going to look for 5 or 6 things to line up, and they're always going to be the same. If you happen to have 20 indicators and that system works for you, then by all means do it. But what tends to happen, especially when people first get into trading and they realize that indicators are a thing, they tend to overdo it. And that can actually hurt you more than help you. In fact, I tend to find, and this is just my own personal preference, that naked charts with just support and resistance and trend lines is awesome. And then maybe just look at that alone by itself, and then maybe add in some trend lines and come up with some key levels, come up with some ideas, and then pull up maybe an oscillator or 2 like market cipher B. And, just take one thing at a time. The cleaner you can keep the chart, the easier it will be to make decisions. Okay? Let's see here if there's any more questions. How long have I been using Market Cipher for my main trading indicator? I've been using Market Cipher as my main trading indicator for a number of months. When did I first find out about it? It was a while ago when CryptoFace was on somebody's channel. I think it might have been the Crypto Crow. It was a while ago. And when I saw it, I was like, wow, this is an amazing visual. An amazing visual of what's happening in the market. Before Market Cipher, I was using various volume indicators, various histograms. I was using money flow, obviously. And I was using delta volume candles to try and help me find like momentum. I was using, excuse me guys, I have something in my throat here. I was using just regular old RSIs, stochastic RSIs. I was using like different trend followers. And really it was just the most basic stuff, right? MACD, RSI, support, resistance, trend lines. And then I was always experimenting with other indicators like Wolfpack and the absolute strength histogram, because when I was into trading Forex, I was into, and I don't know if any of you guys are familiar with this, the no-nonsense Forex method with VP, where instead of dealing with naked charts and just support and resistance, he trades only using indicators. And so I had a weird trading journey. I started just with plain old support and resistance, maybe an RSI and a MACD. And then after that, I went into the world of indicators only to do the whole no-nonsense Forex method, where I had an indicator to get me in a trade, I had an indicator to get me out of a trade, I had a volume indicator to tell me if I had enough juice to get into that trade, all these types of things. And then with crypto, I kind of combine those two philosophies together, where I'm using standard technical analysis and indicators. And once I found out about Market Cipher, I was like, this is a game changer. It's a game changer. I mean, and people will argue about whether or not it's just a whole bunch of free indicators smashed together in one. It doesn't matter what it is, because I know I am not skilled enough to come into TradingView and customize an RSI and a money flow index with PineScript in order to make it do what Market Cipher does. I don't have the time, I don't have the skills, I don't have the energy. I just don't. So Market Cipher is a total game changer. Let's see, any other questions in here? Gian wants to know, why when I open a trade in limit, I click on 100% and it is never actually 100%, while on market it is. Here's why. Because the limit order is filling your order and it has to be at a specific price. And there just might not be enough Bitcoin for sale at that specific price. You might not be able to fill your whole order. Market price, it will buy your Bitcoin at multiple prices. Like if price is changing rapidly and you do a market sale, I mean, you might have bought half of that Bitcoin at one price and half of it at another price. So, it's easier to get orders filled on market, but it's less fees and cheaper for you if it's limit. Hope that makes sense. All right, guys, we have 1 minute left here. If there are any other questions, let me know, and then we are going to be heading out. And I'm going to post this in the Discord for everyone else to see in that private Discord channel. And if not, I see someone typing in there. I see several people are typing. Cool. TK42 Dan, thanks. Thanks for being here, guys. And God bless all of you. Diver72, I don't know how much it will cost to upgrade Market Cipher. I do not know. I'm sorry. You'd have to contact them. Thank you guys for being here. Thank you. Thank you. Thank you. Thank you, Purple Walrus. I love you, man. Yeah, sure thing, guys. And I'll see y'all tomorrow. Okay, yeah, I've got to Got to get back to the charts here. Yeah, thank you guys for being here. Appreciate it. All right, guys, I'm going to end the stream here, but we can obviously still be in the Discord.